Is investing in India's tech sector the next big opportunity, or are we witnessing another bubble? Is the Invesco India Technology Fund your gateway to India's tech future, or are there better investment options out there? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether investing in the Invesco India Technology Fund will be a good option for our investment portfolio or not, let us first understand a few basic details about this NFO. So as an NFO, it opens on 3rd September 2024 and closes on 17 September 2024. And some of the key features of this fund are: it is an open-ended fund type which belongs to the category of equity sectoral technology, and it has Nifty IT TRI as its benchmark index. There is also an exit load of 0.5% for redemption within 3 months, but there is no entry load, and the minimum investment amount you need to start investing in this fund is just 1000 rupees. And the fund managers for this fund are Mr. Aditya Khemani and Mr. Hiten Jain. And according to the riskometer, the risk involved in this fund is very high. And the investment objective of this fund, the primary investment objective of this fund is that the scheme seeks to generate capital appreciation to the investors by investing in equity and equity related instruments of companies in the technology and technology related sectors. So companies focused on driving transformative innovations across technology, automation, robotics, artificial intelligence, cloud computing, and other technological companies, including those benefiting from the increased digital adoption. So now we have taken a look at all the basic categories of this fund, like how it works and what is the closing and opening date and what kind of category it belongs and what is its investment objective. So now we have a basic understanding of this NFO. So now let us move on to analyzing whether investing in this will be a good fit for investment portfolio or not by analyzing the pros and cons of investing in this fund. So first of all, let's start with the advantages of investing in the Invesco India Technology Fund. So first, one of the major advantages of investing in this fund is the high growth potential. So first off, the fund taps into the rapidly growing Indian technology sector. So with increasing digitalization and tech innovation, the growth potential of this fund is immense. And there is another advantage, which is the diversified tech exposure. So this fund provides exposure to a diverse range of tech companies from established giants to emerging players, allowing investors to benefit from the overall tech ecosystem. And next is the experienced fund management. So this is also another big plus, which is Invesco's experienced fund management team. So with their deep understanding of the tech sector, they aim to optimize returns while also managing risk. And another advantage is the long-term investment horizon. So this fund is designed for long-term investors who believe in the sustained growth of the tech sector. Over time, it has the potential to deliver strong returns. And finally, another advantage is the benefiting from the global tech trend. So lastly, even though the fund focuses on Indian tech companies, many of these firms are integrated into global tech brands, providing a double benefit of local and global growth. So these are all one of the major advantages of investing in this fund. Now let's consider the potential downside. So one of the major drawback is the sector specific risk. So firstly, this fund is highly concentrated in the technology sector, which can be volatile. So because any downturn in tech could significantly impact the fund's performance. And another drawback is the high valuation concern. So this concern is that the high valuation of tech stocks. Basically, while the growth is expected from these tech stocks, the prices of some tech companies may already reflect that, leaving limited upside. So another drawback is the limited diversification. So unlike broader mutual funds, this fund focuses solely on tech. This lack of diversification could be risky if you are not balancing it with other investments in your portfolio. And another thing to consider is the market dependency. This fund performance is closely tied to market conditions, especially in the tech sector. So, if the market faces a downturn, this fund could be particularly vulnerable. And lastly, the long term lock in period. So, while the long term investment horizon is a pro, it can also be a con if you're looking for quicker returns. So, you will need patience and confidence in the tech sector's growth to stay invested in this fund. So, this sums up the key pros and cons of the Invesco India Technology Fund. So, let's dive deeper into whether this will align with your investment goals or not. So, now what is the final takeaway from our analysis of investing in the Invesco India Technology Fund? Is it worth investing or not? As we can see from analyzing the pros and cons of this fund, the Invesco India Technology Fund offers strong growth potential, diversified tech exposure, and the backing of an experienced fund management team, making it a solid choice for long-term investors who believe in the future of India's tech sector. However, it comes with its own set of risks, including sector-specific volatility, high valuations, and limited diversification. If you're comfortable with these risks and have a long-term investment horizon, this fund could be a valuable addition to your investment portfolio. But if you're looking for stability or short-term returns, you might want to explore other investment options. And especially if you're just starting to invest and like a first-time investor, and you're a conservative investor who's not willing to take a lot of risk, because this fund has a lot of risk according to the riskometer of this fund. So this might not be suitable for you as well, especially because this is an NFO right now and we do not have the proper track record or the research for this to make and take a calculated risk. That's why if you still want to invest in a technological fund like this, there are other existing similar funds with track record of 7 to 10 years at least, where you can see that it has completed the market cycle period, so you can see how it has performed in the highs and lows of the market period and take a calculated risk. But here as an NFO, it's definitely a very risky to invest in, so it's better if you avoid investing in it. Also, especially if you're looking for funds to add to your core investment portfolio to achieve your core financial goals, then also you need to avoid investing in this fund, because as an NFO we still do not know what kind of risk we are taking or how much risk we are taking. So it's better if you do not invest in it because it's not suitable for your core portfolio. But if you still want to invest in Invesco India Technology Fund just to see how it will perform in the market, then and you also have some kind of surplus money, then you can invest it through a satellite portfolio with a minimum investment on a trial basis. And later on, as the years go by and it is performing well, then you can increase the investment amount according to what you see fit. But when you're just starting to invest in it, let it build track record first before starting to invest in it, because it is an NFO and we still do not know how it is going to perform and what kind of risk we are taking here. So it's better if you do not invest it through a co-investment portfolio. And if you're still struggling to take a decision based on if it will suit you or not, it's better if you consult it with a certified financial planner who will be able to give you professional guidance, because they will check all these investment options you want to invest in for the suitability of the investment objective, the risk profile, the overlap ratio between your investment portfolio and the investment portfolio of the fund you want to invest in. And if it is higher, then they will definitely ask you to avoid investing in this fund if the overlap ratio is high, and what kind of allocation you need to give to your investment portfolio to achieve your financial goals in the time frame you want to achieve it. So they will be able to look at all these factors and give you a personalized financial plan and customize your investment strategies, especially for you to achieve your financial goals in a more faster and smarter way. So it's better if you invest it through a professional guidance with the help of a financial planner as well.
If you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.